Good afternoon and welcome to the FX Daily Wrap-Up with ForexAnalytix. And we're seeing a very, very quiet August trading day. Typical, just exceptionally quiet activity. Look at the cash dollar index. And you would think these are maybe like 10-minute bars, maybe 15-minute bars. These are 2-hour bars. And look how quiet the market's been. Just absolutely dead as a doornail. Halloween night, graveyard trading, just dead as a doornail. But we were on, I popped in quickly on Face earlier this morning, and I've been on Face on Friday, and we talked about this Euro dip, and I'll just go on and, if you missed that, we'll go on and just take a quick overview on that. You know, the market had been looking for this breakout above 112 to move higher, and when I mentioned here on the the analysis I do that we start the week, Blake pretty much handles all the basic technical analysis. I pop in on the weekends to start the week. I offer just something as we go into it, and then I may update it maybe middle of the week. But I put on here after 4 straight down days from another failed upside breakout attempt. The euro found support at 10.75. Stop losses of long positions intensified the sell-off. Those positions will not come back unless the pair has a daily close above 11.78. And we talked about that this morning on Face webinar. And we had the bias chart resistance here. I think Blake had it too at 11.60, and that's what we have it here on the bias chart right here at 11.60. We had 25 before, but 11.60 is where it's going to be, where the rubber meets the road, essentially. I think with Powell at the end of the week, I think he's going to be rather receptive to the market, to further rate cuts. I think someone in the chat room had mentioned, I think it might have been Joe, they've already priced in 100% chance of a rate cut next month, and that obviously seems likely. And I think we would see more really on the backdrop of this whole row with China, and it's still in the market, not the market, but the economy into questionable situation, and of course the inverted yield curve. So I think we'll see more. It's just a matter of how I'm trying to think of the right word, but how open would Powell be, or how much he will convey his openness to further rate cuts. I think that he will, and that could in turn bring the dollar off. It will send the euro up. As I mentioned, I think that we'll run into some trouble here at 11.60. I think, as I mentioned on Friday, I don't think the euro will have too much trouble getting to 11.60 to 70, but in order for us to reassert ourselves, we need a daily close above 11.78, and certainly if Powell is open to that, and maybe we get a little bit better European data towards the end of the week, we could really start to make another move again. But for now, it's under dire straits for now as far as longs. At this point now, I think we can get a bounce back, and I think the market's on hold, and you're seeing pretty much that. We don't have any data today, but you can see how quiet. Look at this 2-hour chart of the dollar index. I mean, holy smokes, look at that. It's just, I mean, you think you would look at it 5-minute bars. These are actually 2-hour bars. So this is, you're looking easily about what, probably about 16, 18 hours worth of data right there, and just no movement. Look at the peso. The real mover is the peso. Blake talked about this on the Face webinar. Really, it's the only pair that's actually moving. And Blake has been talking about this for several weeks, and I think he did grab some of it, and I think he's going to try and buy some more on dips. And he even made the case for, if you saw it on Face, if not, you can see the recording, for a cup and handle pattern, and which certainly would bode, I guess, here's your cup and here's your handle, would bode for much higher prices. For us, we had talked about, for us, the key was, and I'd only touched on this, or actually traded a couple of times most recently, that's about it, is for me the key was when we got above that 1923.6 level. That opened the door technically for this market to move higher. Remember how this kept holding the market back. When we had that big run up on the tariff scare, once we got back, we just couldn't get back once again above 23.6. We had the finance minister resign on Twitter. We saw a big run up. Some of us were able to catch some of that, and then we came back. But at the end of the day, literally, we could not take out 1923.6. And you can see it right there, a little bit more clear. So once we got past that, opened the door for us to move higher, and certainly move higher we have. We've actually come up here into this 1988, just shy of that, although I think our bias chart resistance today was at 1975 right here. But you can see this level coming across. Talked about this on Facebook with Dale about how I like to put the resistance and support levels through the bodies, because that's where the volume is. Anybody that trades the futures markets, you know how important volume is, and a lot of those people go and use that for one of the key studies that really makes a difference of where markets move. And of course, with cash forex, you don't have that opportunity. But when you put it through the bodies, you can certainly see where you can see it right here with the 23.6, how important it was and how the market could simply not close above that. And then once we got past that, it really opened the doors for us to certainly move higher. Same thing here with the dollar yen. We're relatively quiet, but I did mark on the dollar yen. I discussed it with Dale. I think we're going to go and move higher. And if we do move higher, I think there'll be the potential. Let's say Powell is more amenable towards further cutting, which I think that would be the case. I think we can make it up to 788. One of the things I talked about with Dale is I like to use exponential moving averages, but really I only use it as a guide. So you can see here that on this dip down here with the dollar yen, it had the opportunity to potentially maybe even break lower, and it looked like it might. But if you went with the exponential moving averages, we never broke below. We kissed it right in here, but it was still remaining a buy signal. So essentially that kept me from, selling near the lows. I've done that several times before. And you can see here we've rotated higher. But like I said, we've got this resistance here. I put my bias chart support levels in pink. And the reason I do that is because, look, you can see here, if I'm looking around here and I might be looking at another page where the cross rates are, I can quickly see where the day's levels are that I'm looking at and quickly see that and say, wait a minute, just like I'll give you an example right here, dollar CAD. Whoa, wait a minute, we're taking it, we're getting above these, our bias chart resistance. And so if you look at that today, bias chart resistance for the dollar CAD 3301. Whoa, wait a minute, we're breaking above it. I can quickly see that visually. Like I said, everybody has their own way of looking at things, but I like to put these right here because I can quickly see if a market's moving or breaking above, or sometimes I put it in a key area. You can see the Aussie dollar has been stuck in the middle of absolutely nowhere. Let's just go and move into the cross rates. Like I said, it's a very, very quiet day. And I don't really expect a whole lot, honestly, going into Asia now. Once again, if you're looking for activity, and one area you can certainly see that is in the cross rates. And I mentioned that on Face today because you do get some sizable movements in here. I was talking about the guppy here, and we all know that the cable, itself has been under dire straits, and for very good reasons with the whole Brexit. But some of these moves you see here are just literally mind-boggling. If you think of where the guppy was at 148 in April, hey, forget that April. Let's say in May, it was just under 148, and we look how far we fell. 2,200 pips. I mean, like I said, this thing had really come off. Obviously, a lot of the whole yen pairs had come up, but you can see how this has made a big difference. Now, I do stick to the exponential moving averages, and you can see right here that kind of keeps it in check. I'm not a position trader or swing trader. Amanda is, and she's done very, very well with these sterling pairs. But you can see where using an exponential moving average can certainly help you to keep you on the right side. And when I say on the right side, basically keeps me from getting myself in trouble by trying to step in a little bit too late or go against what's a pretty obvious trend. I mentioned this on Face. We had, getting back to what I talked about, putting analysis and support here. We had 126.54 last week as an area of support. The market had just missed it by, I think it was a pip and a half, and we've seen a pretty good rally. Now the market, here's our bias chart resistance. There you go. We've bumped our heads against it. We've kind of paired back, and here's the support. In the analysis we said was, where is the bottom here? And certainly sterling had weakened a little bit as there was still, once again, concerns about Brexit. And that's coming up pretty quick with this October 31st deadline, but that's for another day. But we do see some rather big moves here, and if you're new to cross rates, it certainly takes a little while to get used to, but certainly, like I said, you see some huge moves. Here's a Euro Aussie. And look at some of these moves here. I hadn't traded it in a little while. I was kind of dabbling back and forth in it. But once again, I don't like the whole. But once again, you can see here, some of the moves are just, look at this. I mean, not even catching the high, just a key area right here, this 167 all the way down to 164. And that's only in a matter of a few days. So you get some big movements in the cross rates. I will say it takes a little while to get used to cross rates as opposed to just trading the majors. It's not that difficult, but it kind of, wrapping your head around it if you haven't traded cross rates, but certainly worth the effort to go in and get familiarized with it. And I'll tell you where the cross rates do help, even if you're not familiar, even if you're not intending on trading it. If you're looking at the euro, and let's say the euro is breaking out, one of the things Blake has mentioned multiple times, he'll look at different pairs to see, are we continuing to see strength across the board in the euro? Yes, the euro dollar is moving up. It's not right now, but I'm just saying it's breaking out. But are we seeing it break out against the Kiwi, the Aussie, the pound? I mean, the sterling against the CAD? When you see those and you're saying, whoa, I have something that I can work with. So you want to see that confirmation. That will help you. And like I said, just a couple of notes here, because it is a very quiet August trading day. I mean, like I said, graveyard trading. Speaking of graveyard trading, boy, holy smokes, this Aussie yen has been just so quiet. This used to be, I hate to say back in the day, because back in the day wasn't even that long ago. This thing would trade like gangbusters. You could trade as a proxy for the equities. One of the things that Blake has noted here is, if you think about it, look how weak the Aussie. Now, this is the Aussie versus the yen, so you can see, understand that against the yen pairs, many of the pairs, including the dollar, have been weakened. But like I said, we would see this rebound real quickly if you didn't feel like trading the S&Ps. Now they have the micro S&Ps, so it makes it a little bit easier if you want to get into something and hang on for some of these bigger long-term moves. We may see that as we come into October. But you used to be able to trade the Aussie yen. It would respond so well to moves in the equity markets. You basically trade as a proxy for the equities or E-mini. And boy, those days are, I don't know, about long gone, but we just can't get a lift. This market can't get a lift to save its life, and certainly opens the door for potentially even lower. Now, we may get a move because, like I said, I think the yen will ease back a bit, but we'll probably see it more in tune with the dollar versus, let's say, the Australian dollar, which really has its own concerns. Same thing here with the Kiwi. And once again, the Euro Kiwi, some of these moves, you get some very, very large moves. I mean, look at this. I mean, this is just in this 1-2 hour bar. I mean, that's when the RBNZ unexpectedly cut far dramatic than anyone expected. I mean, holy smokes, 171 to 1, that's 400 pips in 202 bars. And I tell you what, I thought myself it was going to go on a cut. I just didn't, I don't know why I didn't pay that much attention. Hadn't traded the Euro Kiwi probably in a couple of months. But boy, it sure was setting. If you think about it, I guess the odds were open that at least not only would they cut that, but they'd probably be somewhat dovish in their assessment. Holy smokes, man, they cut far more than they thought. Most people thought, and we took off like gangbusters. But you can see some of these cross rates are just like, trading on steroids. And you do get some pretty big movements. But also the key thing is you get some pretty good follow through. Also, you see, once we make a turn, look at that. Again, yeah. You get some good follow through. So once again, I would suggest on a quiet August day, though, what I would suggest is start to familiarize yourself with some of these cross rates. It will certainly go in and help you if you're only trading the majors or comparing strength across a pair, whether it be sterling or whether it be Aussie or whether it be euro or yen. That's about all we have on a very quiet August trading day. Once again, I always advise, consider taking a 10-day trial with ForexAnalytix. It's $1. The application, I mean the apps as far as taking it with you, the mobile apps with your iPad, iPhone are excellent. You've got the data, the real-time data bar that populates just almost as fast as either Bloomberg or Reuters. I use Reuters, and it's pretty fast. I'm saying that data bar. Blake uses Bloomberg and says it's just about maybe a half a second slower than Bloomberg, and that's pretty important if you're trading. You're trading, on some of these reports. And I always mention the analysis, varied amount of analysis from macro to basic technical, which basically that Blake mostly does, to harmonics, to Elliott wave, But to me, I always say it again and again and again, like a broken record, but it's so true. The strength is in the chat room. We have a lot of great traders, a lot of diverse traders, which really helps you. And a lot of the guys and gals very much share their information. So with that, I'll leave you. I would suggest, once again, take a 10-day trial, look under the hood, kick the tires, and see what you think about it. But I think, like I said, you will find it well worth your time and the opportunity to go on and benefit from a subscription with ForexAnalytix. But have a good day trading on a very quiet day, and thanks for joining us here on the FX Daily Roundup.